Now, to understand what all can we really expect from tomorrow's meeting, I earlier discussed all the insights with the Chief Economist of CareEdge, Rajani Sinha. Listen in to the entire conversation. Whether you also agree with the consensus estimate that the RBI will be hiking the repo rate tomorrow by 25 basis points. If not, then what is your own estimate?
So it is going to be a very difficult decision for RBI in this upcoming meeting because inflation is still high, but growth has started showing some signs of moderation, and we are also in a situation where the global economy is going through a turmoil. Growth is slowing there. We have recently had these bank collapses, which has kind of heightened risk of financial instability. So in midst of all this, it is a difficult decision for RBI, but I think RBI is going to go ahead and hike by another 25 basis points. This is simply because inflation is still above their target. The last 2 months data point that has come for CPI inflation is above RBI's 6% target. Core inflation is still very high. It has been, lingering above 6% for quite some time now. And moreover, now there's also a risk of food inflation flaring up again. So given all these aspects, so I must add that going forward, my expectation is that inflation is going to moderate. But in spite of that, it would still remain above RBI's target of 4%. Like for next year, we are expecting CPI inflation at an average of, say, 5.1% or so. So in this situation, I think there is high probability that RBI will hike in the upcoming meeting.
Okay, a 25 bips hike is again you are also expecting in tomorrow's policy review meeting. But then how will this rate hike really impact home loan borrowers?
So it will result in home lending rate also going up. And if you look at overall what's happening in the residential segment, post-pandemic, we have been seeing very good demand in the housing sector.
Yeah.
And even with, some increase in prices that we have been seeing in the market, the demand has remained strong. So if you just ask me as to what's going to be the impact on home loans, yes, the rates are going to go up.
And what is the best way that these borrowers should now approach their loans and EMIs since immediately the bank's reaction will be to increase the tenures to lower the burden of monthly EMIs for the borrowers? What is the wisest way, the way investors and borrowers should be approaching this scenario then?
So actually after this rate hike, my expectation is that rates are going to remain at, I do not expect any further rate hikes from here. So we can assume that we are close to the peak, and most probably with the assumptions that we have on inflation moderating, we can expect RBI to stop at around the 6.75% level or so. So I think that's something which the home loan the borrower should take into account, that we are pretty close to the peak, but at the same time I do not expect interest rate cuts to happen going forward. So it is going to remain at these high levels for some time, definitely till next year. So they should take that into account, that rates are going to remain high, if not higher, for quite some time.
Okay, so the rates will remain elevated at these levels. That's what home borrowers will, or home loan borrowers will have to keep in mind. But what about depositors then? Do they at least stand to gain with this hike in the repo rate?
Yes, what we are seeing is that initially, banks were very quick to pass on the higher rates in the form of higher lending rates, because now most of our rates are linked to external benchmarks. And hence that resulted in the lending rates going up very quickly, whereas the deposit rates were a little slow to catch up to the rising policy rate. But now they have started increasing, and we do expect the deposit rates also to increase in line with the increase in the policy interest rate. So yes, they do stand to benefit from this.
Okay, most of the fixed deposit investors have been cheering the kind of rate hike that we've been seeing. Now what should they do? Should they lock in their investments at this higher rate? Say, for example, if this repo rate hike comes in, should they now lock in or still keep it floating at this point?
I think they should lock in now because, as I said, I feel we have kind of broadly reached the peak. So hence, from here, it's going to remain at this level, and next year we could expect some cuts happening. So this would be a good level to lock in.
A repo rate hike definitely coming in, a long pause, and thereby after that in the next year you can hope for some cuts coming in. Until then, elevated rates are here to stay for now. Well, why did a well-known US pharmaceutical company, Johnson & Johnson, agree to pay $9 billion? We'll tell you the entire story right on the other side of this break. Stay tuned.